A very good morning to Doctor and all my friends. Today, me, Cheng Xing Yi, and my one group member, Ho Hui Ying, will represent our Group 2 to present the Assignment 1 and 2 respectively, which are Event Study and Vector Autoregression, VAR Model Estimation. The name list shown is all of our Group 2 members. Before I start to present, this is the content in our presentation slides, where this is divided into two parts, which are Event Study Analysis and VAR Model Estimation. Now, I will go to Part 1, the Event Study Analysis, which includes the subtopic of Introduction, Method and Calculation, Conclusion, and also the references will be attached at the end of the slides. First of all, the Introduction part. As we know, mergers and acquisition (M&A) is often occur in the real world, while it is usually unannounced to the public, but only a part of it. Hence, this results for the investor to become more difficult to make their decision in investing. So, the method to analyze such situation will be introduced in this project. Next, so what is the objective and the methodology of this project? For the objective, the study is conducted to examine if a merger event happens, what is the effect it results on the return of the firm chosen upon the public release. For the methodology used in this study is event study analysis, in order to examine the financial effect behind the merger between the firm chosen. Next, let us move on to the method and calculation part. I have summarized our method in 4 steps, where the first step is data selection. Based on our discussion, data of Microsoft Corporation and Nuance Communications from 26 February 2021 to 24 May 2021 is taken from Finance Yahoo. The second step is to determine the specific event and its period. The specific event chosen is the merger and acquisition between Microsoft Corporation and Nuance Communications on 12 April 2020. The event window is 61 days, which includes 30 days before and after the announcement of the specific event. Step 3 is to measure the normal and abnormal return to see the response of the stock price on the specific event. The formula of abnormal return is shown in the slide. Lastly, for Step 4, we do hypothesis testing to test if the abnormal returns of Microsoft Corporation and Nuance Communications are statistically significant. The conclusion will be made at the end of the testing. Now, we continue to move on to the result analysis of the hypothesis testing. There are 2 hypothesis testing are conducted, which are the test of abnormal return for stock Nuance Communications at 0 day and the test of abnormal return for stock Microsoft Corporation at 0 day. The result for the testing 1 shows that the abnormal return for stock Nuance is statistically significant. Hence, we can conclude that the merger had an effect on the investigated firm's stock price. While for the testing 2, it shows that the abnormal return for stock MSFT is not statistically significant. Hence, we can conclude that the merger has not had an effect on the investigated firm's stock price. Next, we move on to next slide. In this slide, the graph of cumulative abnormal return is shown for both companies from the 30 trading days before and after the announcement. We can see that for Nuance firm, there exists a significant increase in the cumulative abnormal return at day 0, and it supports the hypothesis test result, where the abnormal return is statistically significant. However, the trend turned to decrease right after the event date, similarly for the Microsoft Corporation. For the table below, it shown the cumulative return for both firms for 61 trading days. We can see that Nuance has a negative stock market price, while MSFT has a slightly positive stock price development over the event window. The negative result for Nuance contradicts the positive result on the event day, may be due to the retracement of the stock price. However, the positive result for MSFT on the event day is supported by the slightly positive cumulative return. Finally, we move on to the conclusion. From the previous slide, the abnormal returns are calculated to see if the merger has affected the stock price of both companies. Nuance stocks shows a slightly positive result, while the MSFT shows a slightly negative result on the event day. A t-test is performed for both companies respectively, with the result of statistically significant for Nuance and statistically not significant for MSFT at 5% of significance level. This indicates that the Nuance stock price is affected by the merging event with the positive way. However, the Microsoft Corporation stock price is not affected by the merging event since there is no abnormal returns on the event day at 5% significant level. This implies that the market believed that the merger would not bring to higher profits. Now, I will end my presentations for part 1 and pass to Hui Ying by showing the references of our Group 1 assignment. Thank you.
Good morning, Doctor. I'm Ho Hui Ying, and now I'm going to do a presentation for our Part 2 assignment, which is Vector Autoregression VAR Model Estimation. In our assignment, there are 3 variables chosen, which are XYZ and most appropriate VAR model, causality between variables XYZ, and also reference. The objective of our study is to examine the relationship between the 3 macroeconomic variables, which are GDP growth rate, inflation, CPI rate, and unemployment rate in Malaysia. The 3 variables we choose for our assignment are GDP growth rate, inflation, CPI rate, and unemployment rate. We let these 3 variables as XYZ. The annual data for each variable in Malaysia from 1995 to 2020 are collected. Every variable in this project has a total of 26 observations. We use one software called RStudio to help us with our Part 2 assignment. Okay, moving on to the most appropriate VAR model. In order to estimate the VAR model, we need to determine the optimal lag order first. This can be done by using the VAR select bracket function in RStudio. The right-hand side shows the result of the optimal lag. By using the optimal lag obtained, now we are able to estimate the most appropriate VAR model with the lag order of 3. The estimation results are shown as below. From the study, we can see that each variable is a linear function of its past value and the other variable's past value. The VAR model with a lag order of 3 is the most appropriate model to forecast the future value of the variables. Moving on to the causality between variables, the testing of causality of GDP growth rate, inflation, and unemployment rate by Gross's causality test. The null hypothesis of this testing is all the lag coefficients are 0, and the alternative hypothesis of this testing is not all coefficients are 0, at least one coefficient is not 0. Okay, for the first part, which is the causality between GDP on inflation and unemployment. From our study, GDP growth rate do not grandeur cause inflation, CPI, and unemployment rate. Secondly, for the causality test between inflation on GDP and unemployment, we know that inflation, CPI, do grandeur cause GDP growth rate and unemployment rate. Lastly, for the causality test between unemployment on GDP and inflation, the unemployment rate do not grandeur cause GDP growth rate and inflation CPI. To conclude, the objective of the project is to examine the relationship between the 3 macroeconomic variables, which are GDP growth rate, inflation, CPI rate, and unemployment rate in Malaysia. In this project, a suitable VAR model is estimated to forecast the future values of variables. From the calculation in the previous section, we can make a conclusion that the VAR models with the number of lag of 3 is the most suitable model to forecast the future value of the 3 dependent variables. Apart from that, we can also make a conclusion for the causality between the 3 dependent variables respectively. That is, we conclude that the GDP growth rate do not grandeur cause inflation, CPI, and unemployment rate. The inflation CPI do grandeur cause GDP growth rate and unemployment rate. as well as unemployment rate do not venture close GDP growth rate and inflation CPI at 5% of significant level. These are all the references we use for our Part 2 assignment. Thank you from Group 2. Hope you enjoy our presentation.